What's up, everybody? Joshua Salvetti, and welcome to the High Performance Trading YouTube channel. So today I want to break down one of my most effective and dependable strategies that I use to get in and out of the market successfully. It's called the gap fill strategy. So what it is anytime there's a large move after hours or pre-market and the commodity opens well above what prior day close was, you get this large gap in price action. Right? So this large sell-off and how price then fills the gap. So today I want to break down the context behind that, why it happens, what it looks like, and how to make money off it. So before we go any further, ladies and gentlemen, check out the Instagram at High Performance Trader. This is where I post tons of daily recaps, content, tips, tricks to get you in and out of the market successfully. And then at the top of the page, we have this link straight to my website and also at the top of my YouTube page of the highperformancetrader.net. Now, this is extremely valuable, and if you are not involved, you must get involved, because right now I am offering a free online course called Trader Bootcamp. Now, Trader Bootcamp is extremely resourceful and extremely beneficial and extremely valuable, right? So over at Trader Bootcamp, I drop a new mini course every single week, right? And it's completely free. So get involved. There's a quiz at every single end of every single topic, right? To test yourself, see what your strengths are, see what your weaknesses are. Go check out the outline. I mean, we break down market concepts, trading strategies, trading metrics, how to log and recreate winning trades, probabilities, and market psychology, right? Now, this market psychology part's phenomenal. Look, we run through trader accountability and self-awareness. We run down creating structure in an unstructured environment, right? Because the market is completely unstructured. And without making it a structured environment, you're going to get eaten alive, right? We think we want that freedom, right? But with that freedom comes a lot of responsibility. So we're going to break down how to create a structured environment. Perceiving market information, right? So you may be able to identify certain information in the market, but if you cannot perceive it in the correct state of mind, you're going to fail. So we break down that. We break down cognitive behaviors, biased thinking, and then most importantly, beliefs about yourself, the market, and success. Because you may be able to identify an edge, you may be able to make some money, but you will never have longevity or long-term success unless you can correct your beliefs and expectations about the market, yourself, and success, right? So this course is going to be the holy grail of online courses. Once again, it's free. Get involved. You got nothing to hurt. And if you want to get involved in the Discord, go ahead and click the Discord army. So without further ado, let's break down the gap fill strategy. Right, so this week ending in 4/23/2023, we have seen tons of these gap fills happening in these current market conditions. So before I go any further, I just really want to beat into your head that you must be able to identify market conditions each and every single day. It's one of the most important things you'll ever do as a trader is, once again, identify your market conditions. So we got this upward trend, and now we're kind of moving in a balanced range of a market. And we're kind of forming this wedge, right? So that's what I do every single day. Large time frame analysis, identify your supply and demand zones, right? Just understand where your areas of value are and where you're expecting large money to get in and out of the market. Okay, so this is what the chart of the S&P 500 looks like with pre-market data. Okay, so you can see we got our double tops, we got our double bottoms, right? Just regular market information. Now remember what I just talked about with how to perceive market information correctly. So what I like to do and what works for me is, once I've identified my areas of value, right? You got all this demand up down here, you got all this supply up here, right? So next what I do is then get rid of pre-market data. You come over here to this chart settings tab, click equities, click show extended hours trading session, right? Take that off, click apply. So now your chart has absolutely no pre-market data, and you're going to be able to identify large gaps. So I just want to kind of run through the week real quick. So now we're going to break out the 5 minute. So over here on 4/18/2023, which was Tuesday. So Monday, let's start there. So Monday the market ended, right? And it was at 413.92, right? That was the ending price. That was end of day. Now guys, remember, and I know I've talked about this before, but in case you haven't heard, end of day is extremely volatile, right? Every single day at the end of the day, there is way abnormal volume, right? There's crazy asks, there's crazy bids, there is crazy traders getting involved at the end of the day battling, right? I don't know why it is what it is. So look at how large this volume is over here on the S&P 500 at the end of the day. It rips all the way up to like 4 million every 5 minutes. Crazy. So what is that telling us, right? So remember, as a price and volume analysis trader, what we look for and what we try to identify every single day is areas of value. Now, why are they areas of value? They're areas of value because they offer us opportunity to make money, right? Now, what is actually the components of opportunity? That is volume. That is battles over buyers and sellers, reversals, right? We're looking for areas where there's tons of volatility. So if at the end of the day, the volume increases by 10x, that is telling us that is a very important area of value the next day, right? So how that plays out in a gap fill strategy. So you open above over here at 415.62, way higher than 413.92. All right, so you open $2 higher, and then price kind of consolidates, gets met with a double top, and we get strong selling, closing the gap, right? And now look at this. Once we hit the gap, even though sellers prevailed, look at all the buyers that stepped up, right? So we sold off heavy straight into end of day. Right? Went for that end of day rejection. Buyers showed up, volume, and then sellers prevailed, right? So super important to be able to identify this gap fill. So basically you open way higher. Now, I'm not just saying because you open higher, take the market short. You must identify a chart pattern, right? You must identify the volume of the sellers taking control of the market, right? Because just because we're targeting end of day or we've opened much higher doesn't mean it's a 100% guarantee. You must be able to identify what the candlesticks are telling you. And then once you do that, and you can see here we had a top high over here at 415.63, and then we literally ripped up to 415.72, right? False breakout, and then a large sell-off to end of day, very aggressive, then broke through end of day, and then end of day then acted as a resistance, right? Until we finally got over it. And then we ended the day here at, let's move our end of day indicator. Ended the day over here at 414.22. Okay, so now that we've ended the day, once again, we get all this very large volume, volatility telling us that this is a strong area of value. We open the next day down here at 412.23, right? So I just want to check real quick. Okay, so we open down here at 412.23. Not really in a demand zone. When you do drop down into a demand zone, that is pretty much a slam dunk to take the market long, right? And we'll cover that in this one right over here. But okay, so we open way below down here at 412.12. Okay, so once again, we've opened way below. We're about $2 below, and then we identify another chart pattern over here, double bottom, right? So we make a low over here at 412.16, and then price comes down. Look at, sellers were really trying to defend VWAP. We get all these Bayesian candles around VWAP. That's usually a strong indicator that the market's going to go much lower, but it didn't. Buyers prevailed. So then we get this double bottom. This is when you take the market long, targeting your end of day, right? Now, once again, we are getting this massive imbalance in the demand of shares, which is causing these buyers to step up, right? So you get this super large sell-off during pre-market. Now, all those orders that were sold off pre-market, they need to be met with buyers. That sell-off creates liquidity for demand, right? That sell-off creates liquidity for buyers. Then you get this double bottom chart pattern, which is nothing but selective human behavior, right? Remember, you see a chart pattern, all what you're seeing is smart money behaving a specific way. So you get your chart pattern, you get large volume coming in, price rips above VWAP. This is when you take the market long, targeting end of day. And look, it was a absolute perfect move all the way up to end of day. And then at end of day, you got a couple, you had sellers step in, or at least they tried, right? Let's just draw our supply zone real quick. Or we'll just, that's fine. Rips right up, multiple rejections, then we blow past it. And then we then hit this supply zone right here, from the day prior and start to sell off. So are you seeing the pattern here? Right? You open way below or way above end of day. There is a high probability that that space is going to get filled. We see this multiple times in this type of market condition. So once again, we get a massive sell-off, right, the next day. And we get all this volume, once again, at the end of the day. And then you get this massive sell-off. Now, this one is very important. And the reason it's so important here is we sold off right into demand. Right, so this is the grand slam home run of gap fill strategies, right? So we got end of day over here and notice how this day pretty much ended at the exact same price as the day prior. So we get this large sell-off once again from 414.22 all the way down to 411.11, right? Which was the exact low of 417.2023, right? The exact low. Look at that, down to the wire, right? So we had a low of 411.07 and then a low right here of 411.08, right? So 1 cent away from Friday's lows. So we open right in demand. Now look at the volume here. The volume on this open candle is actually higher than the end of day candle, which is very rare. I rarely ever see that. What is that telling you? That is telling you that smart money is stepping in at the exact same price that they stepped in back on Friday, right? Large money stepped in heavy right here, causing price to rally all the way up to 415, right? So right here, you get this massive volume within demand. You got a large gap down strategy going on. This is a perfect indicator to take the market long. Now, the type of trader I am, I'm not just going to go long. I want a little more confirmation, only because I like to identify chart patterns to solidify my trade plan, right? So let's play the day out. So price rallies, we get strong buying pressure, and then we get this rejection, and then we come down to VWAP and we make a lower high right here, right? So once price bounced off right here, we kind of drifted, and then you can see this wedge that I formed right here. And what happened is when we came down to VWAP and we got this Bayesian candle at VWAP, right, defending this 411.86 area. This is when I took the market long, right, targeting end of day. And basically, in a nutshell, this is buyers showing up, creating demand for the commodity, right? Because once again, you get this large sell-off. You got sellers that sold off all after hours, all pre-market. You open up in demand, right? Very bullish indicator. And there's tons of volume. There's a chart pattern. It's a home run, ladies and gentlemen, right? And yeah, we didn't even hit end of day here, but look at, we still filled this gap, right? So we had this spot right here over at 413.64, which acted as heavy resistance. This is what you call the break and retest strategy, right? So once price ripped all the way up to this 413.64, this then turned into massive resistance where sellers came in extremely strong with all this volume. Look at that. So you see how I'm using volume to tell me the overall context of the market, right? Volume showed up in demand, right? Take the market long. Volume showed up in supply or resistance. Take the market short. Massive sell-off all the way to demand, right? And then we got another break and retest over here, because remember what this 411, what was that? 411.03 area that we bounced off prior. Once we broke below that, price then retested it. This is when all these guys' stop losses were triggered, and then price sells off, right? So it's very important to be able to understand the psychology behind price action, right? So once again, gap filled. Then the next day there wasn't a gap fill. But I hope you guys are understanding what I'm throwing here, right? The gap fill strategy is very important. It requires a lot of liquidity to be filled. And what that does is create opportunity for us as traders. So especially when the market opens up in demand, you must take that into consideration, right? And if you get that volume, if you get that chart pattern, that is a slam dunk for a home run trade. Right, so this is Joshua Salvetti, guys. Get involved in the Trader Bootcamp, right? Get involved in the Discord. Message me, email me at joshuasalvetti@gmail.com. We will get you involved, right? And I will see you in the next lesson.